Good afternoon, everyone. Welcome back to another bar by bar analysis here on my channel. Today is April 14th, 2022, and today we are looking at a 2000 tick chart with a 21 EMA in blue, 200 EMA in magenta, and then we have a volume indicator down here that I've recently added to my chart. Now, my last video was doing really good. I got a lot of positive feedback. I got a lot of comments and DMs and messages from people letting me know that it's helped them. Some other people said, no, it doesn't work for me. I just want to preface this by saying trade in a way where you're making money, right? There's nothing that I can tell you, there's nothing that anyone else can tell you that's going to convince you to trade a different way than something that you're used to. So trade what's comfortable for you, but understand that there are other strategies out there. There are other ways to get that edge when trading the market. And if you have a way that you're trading right now and you're profitable, you're making money, perfect. Stick with it. Don't change anything. But at the same time, if you're not being as profitable as you want to be, if you're not doing as well as you like, don't be afraid to kind of change things up, try and figure out what works best for you, because otherwise you're going to keep doing the same thing over and over and over again, and you're going to get nowhere with it. You're going to be wasting a lot of time. So I hope people found benefit in watching that video and have introduced volume into their trading. I definitely have, and it helped me again today. I ended up taking 3 trades, I believe, 3 or 4 trades, and I lost one. And we'll get through all of that. But the new format that I want to do for these videos, I want to try and expedite them and make them very quick, easy to watch for people. Just power plays. We're going to power straight through these. Obviously, show analysis, but then jumping right to areas of the chart where I feel that there are potential trades that could have happened or trades that I took, and talk exactly through that as we go bar by bar and analyze this market. So now, as we normally do on this channel, we're drawing our level of resistance here at the top for overnight highs and level of support down here for overnight lows. Now, just before the market opened, we had prices trending in the middle of the range before pushing down. Short-term trend with the break move to a new low, and that created these overnight lows. And then we're pushing above the EMA. We want to see how prices are going to react in this general area here. After this downtrend had played out, where do we expect prices to go? Back to the top of the range. So initially I had a trend that looked somewhat like this. And then later on in the day, I did kind of go back and realize, well, we have a short-term trend that's working up with a break, looking for a new high, waiting for EMA to catch up as prices continue along here. I did draw in a range here as prices were oscillating up and down before prices pushed up. Now, once we reached a double top here at these overnight highs, I was looking for a reason to go short. With how far from the EMA we were, I was looking at potentially trading a failure. There's a second entry long that triggers, and I have a live trade of this specific setup that I'm going to post right now. So we'll be back in just a second. All right, I'm going to try and record a live trade here. We had a movement down in the pre-market hours, and then prices pushed strongly above EMA, pushing to the top of this overall trading range that we have for the day. Now, where are we anticipating for prices to go? Back to the bottom of the range. And very clearly, we bounced off to the tick our overnight highs before we came down and made a first entry long. Prices coming down, looking for a second entry long to fail. Also potentially looking for a second entry short and lower high with room back to the EMA if we can. And so my goal right now, I'm going to do a sell stop limit order and look for, okay, so there's our second entry long that triggered. Additionally, with the volume indicator here at the bottom, we had slight increase in volume as prices were pushing up. Actually, hold on, let me try and focus here. Second entry long is going to fail. It's going to fail right here. One tick below. And there's the entry, looking for a 4-tick move with my stop loss already in place. Not the best signal bar to go short on. Nice push down back to EMA. There we go, break even +1. Let's put the runner here at the support level. There's that 6 tick and looking for the runner to fill. Boom. 237 is what I'm showing. I traded this as a failure. Probably not the best signal bar to go short on. But see, when people trade failures, they trade it in different ways. They either trade it below the bar where the second entry long failed, or an even more conservative approach is people are going to be entering 1 tick below this bar here. So the second entry long triggered, you have this green bullish bar. If it reverses and prices push below this green bullish bar, the next target that needs to get stopped out are people's stops here at the bottom. So I probably entered a little bit prematurely. The safer thing to do would have been entering one tick below this signal bar here. That would have given me plenty of room back to the EMA for that trade. And again, while we're up in this uptrend here, we're coming off the highs, working our way back to the lows of this trading range. We have plenty of room back to the EMA. And what I was noticing with volume is, as I move my cursor along here, increase in volume as prices go up. And then as we enter consolidation, people are not looking to trade this. So the volume is going down. People are not looking to trade. Volume's continuing to go down. And then we get a nice pop out of this trading range. Not really a way to enter this. Volume doesn't really help with that. But we have an increase in volume temporarily. And then as prices come back down, volume starts to increase as the move starts. We get one pop here with an increase in volume, but what I'm noticing is that these influxes in volume do not indicate that it's going to keep moving in that direction. That's just a pop in volume as traders try entering the market to both buy and sell. And then as prices reverse, you get a slight increase in volume as the move starts. And as you start working back towards this EMA, volumes kind of comes down a little bit, but again, you have room back to the EMA. Now, as you probably saw in that video, I made the mistake of putting my runner right here. And my thought process behind it was we had a support level of this channel moving up as well as the EMA pushing up, but I did not manage that runner correctly at all. And I really think subconsciously I was just trying to get a quick video in. And so I didn't hold on to that runner, and that bit me bad because prices pushed strongly below EMA, pushing down through 200 EMA. And where do we expect prices to go? All the way to the bottom of this range. I read the context correctly. I just made the mistake of putting my runner right there, and that hurt me bad. With where I entered, I easily could have gotten a 20-point trade. I missed out on $1,000 easily here. When I look back and I analyze my trade, I should have waited to see how prices were going to react here at EMA. I should have left my stop where it was. And then as prices push down, the way that I personally like to move to manage my runners is I'd put my stop loss one tick above the swings. So as it continued to swing lower, I would have brought my stop all the way down and up at these swings as prices continue to push lower, and I would have easily gotten that 20 points there. So that's very frustrating, but you live and you learn. So as prices continue here, we officially make it to the bottom of this trading range. And now I'm curious to know how prices are going to react here at EMA. So are prices going to come up and try and attempt to make a new low here? I mean, we don't know yet. So prices had pushed below these overnight lows before pushing above and came down for a first entry short. So this second entry short triggers and fails back up. Unfortunately, we did have a close below the EMA here, but we do have prices that are reaching the overnight lows. Where do we anticipate prices are going to go? We're anticipating they're going to go back up into this trading range. I'm going to get this out of the way so it doesn't confuse us here. This could have been an entry that some people took. It is risky, but if you wanted to trade this second entry short failure, people are thinking that prices are going to continue to move down, but they didn't quite make it to the EMA here. The only reason why I kind of like this trade is with the overall context. We're trying to sell up here when these prices are high. We're trying to buy back when the prices are low. We had this first touch for overnight lows, and as prices come back down here, they shoot past, but then quickly come back up. You've got a lot of stems here on bottom. That could be a risk worth taking. And if you didn't want to enter above this bar, you could enter above this bar. Prices holding above EMA. We had this short-term trend with a break. Prices did not push to a new low like we thought they were going to. They pushed above EMA and closed. So we just have to kind of respect that. Additionally, depending on if you saw it or not, we do have somewhat of an uptrend starting here, of a short-term trend. You could have entered here and possibly gotten out for the scalp. I wouldn't have entered on this bar just because of how far the body of the candle is away from the EMA. But with prices moving up, here's this 200 EMA indicator that I use. Prices came right up to find a resistance level here at the 200 EMA. With this swing low here with a first entry short, second entry short off 200 EMA. Plenty of room back down to the 21 EMA here. This is a short that I could argue it's worth taking just because you have enough room back to the EMA and prices come back exactly to the EMA and the next bar prints and it continues back down, but you definitely would have gotten out for a scalp there. Now, as prices start to continue down, cutting straight through the EMA, we have to be able to acknowledge what's going on with the context. Prices had moved down to the new lows to test these lows, pushed up above EMA. We're anticipating for prices to come back up to work the top level of this range, but we didn't get it. 200 EMAs holding, prices are pushing strongly down. At this point, we're really not looking for any buying opportunities. We're looking for reasons to go short. And also, while price action is primary, I don't want to neglect the helpfulness I found with using the volume indicator to kind of confirm this trade, for example. So if you look at my cursor here and you compare it with the volume, as prices work up, you kind of notice that volume has been going down. Since coming from these overnight lows, as prices are pushing up, the volume has trended downwards. As it comes through EMA, volume's continuing down, and then volume starts to pick up again right here. You kind of notice volume starts to pick up as it finds resistance here at 200 EMA, and then as prices push down here, the trend of volume is up with these bigger influxes of volume coming into the market right here. As prices break that short-term trend break, make a new low. All right, and then just to fast forward a little bit here, prices continue to chop up in what seemed to be a bigger trading range that we had at play here. Initially, when prices came back to the EMA here, this is where I initially drew the range. And then as we continue to make higher highs here and higher lows, I started bringing the range up as we got more price action. I didn't find any opportunities I liked, and then after prices reached the top of this trading range, they continue to come back down. We had this new high with a first entry long by one tick. Prices come down for a second entry long failure, looking to reach back to the lows of this trading range. And so this is where I went short, nice signal bar off the EMA in a trading range, plenty of room down to the lows, and got stopped out. Prices immediately reversed, and I got stopped out on that trade. So that was a little bit frustrating in the moment, but I was trying to remain attentive and focused on the market. And what I found was this setup here. So we have somewhat of an uptrend working up with a break looking to make a new high. And with this break, we didn't quite reach the opposite end of this trading range. So I thought, okay, well, there's a lot of buying pressure in here. Maybe we'll break back up above EMA and try and make it to the top of this trading range. I treated this as a higher low, entered on a limit order. EMA is a little bit flat here, but at the same time with this bullish imbalance, higher highs and higher lows are being made. Brief correction below EMA before we closed above EMA. This is where I entered long and prices went back up to the top of the trading range here. Prices then come back down, try pushing below EMA before just ranging back and forth, but we're slowly making our way higher. 200 EMA is continuing to come down, so I am keeping an eye on that. This level of support for overnight lows is now acting as a resistance for the top of this range. So I'm really not looking for reasons to go long anymore at this point. Once we start getting these touches here at the top of the range, I'm starting to look for short opportunities. We had a new low with this swing with a first entry short. Prices come up, second entry short below this bar. I didn't enter this, but I could see how people could. It's a fourth touch off the top of this resistance level, second entry short. Signal bar is fairly decent. I would have liked just a little bit more room to the EMA. I guess if you entered on a limit order at 4.50, 3.50, if you're going for 1.4 ticks, you would have probably looked at taking this short. And that next bar prints, you would have been out of that trade. And if you held just a little bit longer, you would have been out for 2 points if you needed to. This bar here is second entry long with a new high, first entry long, second entry long, but not interested in going long. Even if you are coming off EMA at this point, we've got a level of resistance up here. It's not really something that I want to risk, but that didn't matter. It made the point anyway. Some people could argue taking that, but I just didn't like the 200 EMA coming down, going long directly into this level of resistance here. My main focus was just trying to find short opportunities. So when we get this bearish bar here at the level of resistance, 575 to 475, you have 1 point worth of move back to the EMA. The new low here with a first entry short, second entry short below this bar. This is what I was looking at trading. And so that's a short I took. I got out for a scalp, and runner ended up getting stopped out. But prices had pushed below EMA before pushing back strongly above EMA. Not necessarily a way to get into this trade at all, but here we are finding a level of resistance as prices kind of chop along here at 200 EMA and this level of support down here at overnight lows. So I'm really not looking for reasons to go long. I'm looking for reasons to go short. Prices are pushing down below EMA, and this was a signal bar that I saw. This is a trade I thought was worth the risk with a new high here. First entry long, second entry long before prices come back down. I treated this as a lower high. It didn't tick one tick up, but sliding volume up here for just a second, I did like what volume was showing us. As prices were moving up, volume was moving up to indicate the move was taking place as buyers and sellers were entering the market. And then as prices started to come down to the EMA, brief moment where the volume is relatively low compared to everything else, before prices push through the EMA, close below the EMA, and this is where we start to see volume increase. And so when I saw this, I took a trade, one tick below the signal bar, and prices continue to move down. And as this move is taking place, you see volume increasing. Sellers are entering the market. Where do we anticipate prices are going? Back down to the bottom of this range. And what happens? Let me slide this volume out of the way. Literally that. Prices come back down to the bottom of this range and find a little bit of support down here. This is why I'm saying the volume indicator has been helpful. Is it the end all be all? No. You still need to focus on price action. You need to focus on overall context. But when you introduce volume, it helps kind of confirm your bias, helps confirm the trends that you already have in play, and you're more likely to feel confident about the trades that you enter. Additionally, we did have this short-term trend in play that I had drawn in back to the bottom of this range. Prices consolidate for a bit. I didn't see any entries that I liked. I also wasn't paying too much attention to the market at this time. When you find this level of support down here, you're looking for prices to see how are they going to react at EMA. I guess when you see the prices reject off EMA once, come back up, and then reject again, I guess some people could argue taking this. I didn't really see it, notice, or recognize it, but you have a nice close below EMA, plenty of room to the lows. As 200 EMA continues to push down, you have this large move here. I could see how people try and enter on that. Not interested in going long, taking any filled breakouts, right? It's a second entry long, nice signal bar, but we're not pattern day traders, we're price action traders, and we focus on context when we're trading. Can't forget to draw a little bit of a range here, and I guess that would have even confirmed this, right? You have prices up and down, up and down. You're looking to sell when the prices are up here at the top of the range. When I go back, yeah, that probably would have been a really good trade to take. And where do prices continue to go? Prices continue to move all the way down. And by this time I was done trading for the day. Again, it was a little bit unfortunate to get this loss over here. That wiped out some of the profits that I had in my earlier trade from the morning, but that's just how it is sometimes. We want to focus on taking high probability setups, and if you're winning a lot more than you're losing and you're protecting your capital, you're minimizing your losses, you're going to be profitable in the long run. So let's just continue to keep working on what we got. Next week, as much as I'd love to post videos, I'm going to be out of town Monday, Tuesday, and Wednesday for work. So I don't think I'm going to be able to post on those days, but for everybody that enjoyed today's video, if you liked it, please leave a like, subscribe, turn on post notifications so you know exactly when I post these videos, and feel free to share this video with a trading buddy. It never hurts to have that additional resource. We as traders definitely want to aim to get better. We want to expand our knowledge and continue growing in this field so that we can all quote unquote make it and be profitable, because that's the goal at the end of the day. I hope you like the format of the video for today, and until next time, I will see you later, and have a happy Easter.